What if I told you the strongest nuclear signal in this market may not be a hedge fund filing at all? What if the real signal is Microsoft, Amazon, and Google signing around future electricity demand, while retail is still debating whether the nuclear trade is just another hype cycle? Let me be straight with you right now. Big tech is not just talking, it is signing. And that matters because this is not just a nuclear story. This is a demand floor story. This is not just a stock story. This is a market repricing story. So before we break down the watch list, subscribe to Stock Breakout, hit the like button, and drop the one power or nuclear stock you think Wall Street could be moving into next. Because the first AI trade was chips. The next one may be power. That is where this whole story starts to get more interesting. For the last year, the market has been obsessed with the obvious angle. AI needs more data centers. Data centers need more electricity. Nuclear sounds exciting. Small modular reactors sound futuristic. Retail piles into the headline. Social media runs with the story. And every week, it feels like somebody is trying to find the next nuclear moonshot. But the obvious trade may not be the best trade. The real opportunity may be one layer deeper. Because building AI models is one problem. Powering AI infrastructure at scale is a much bigger one. Training clusters, inference loads, hyperscale campuses, grid reliability, long-duration electricity supply, transmission upgrades, firm generation capacity. That is where the bottleneck gets real. And the market may still be debating the story while the demand is already showing up. That is the key point of this video. The strongest institutional signal in the nuclear trade may not be a 13F filing. It may be Microsoft, Amazon, and Google using power agreements, strategic investments, and advanced nuclear partnerships to lock in future supply. Retail buys stories. Big tech signs contracts. That difference matters. A hype trade is when people chase a theme because it sounds big. A demand floor trade is when major customers start acting like the demand is already there, and they want to secure supply before the rest of the market fully catches up. That is why these big tech moves matter so much. Microsoft announced a power purchase agreement with Constellation that would enable the restart of an 835 megawatt nuclear facility in Pennsylvania that was retired in 2019. Amazon announced 3 agreements to support nuclear energy development, including enabling the construction of several new small modular reactors, and it also invested in X Energy. Amazon said nuclear can help power its operations and meet the growing demands of its customers. Google signed an agreement with Kairos Power involving multiple small modular reactors, with a deal expected to enable up to 500 megawatts of new 24/7 carbon-free power to U.S. electricity grids. Now step back and look at what those actions are really telling you. Tech giants are not just creating demand for compute. They may be creating demand certainty for power. And once the market starts to believe that demand is durable, the entire power stack can get repriced differently. Not every company benefits the same way. Not every nuclear stock is getting the same kind of signal. Some are infrastructure. Some are narrative. Some are closer to real cash flow visibility. Others are closer to long-duration optionality. That difference is exactly where the watch list matters. So let's break down the 7 stocks. First up is Constellation Energy, ticker CEG. This is the clearest demand floor beneficiary in the group. Constellation owns existing nuclear generation, and that is exactly why the Microsoft agreement matters so much. In a market obsessed with future reactors, future permitting, and future buildouts, Constellation gives you something different. It gives you existing nuclear capacity that suddenly looks more strategically important in the AI era. That is the underappreciated angle. If hyperscalers want reliable, clean, firm electricity, existing nuclear assets could become much more valuable than the market once assumed. Not because the story sounds good, but because the assets are already there and the demand side is getting stronger. The market may be underpricing how important existing nuclear generation becomes when the biggest buyers in the world start signaling they want long-term supply certainty. The biggest risk with CEG is valuation. When a stock becomes the obvious institutional quality winner in a hot theme, expectations can run ahead of fundamentals. So even if the long-term setup is strong, entry point still matters. Next is Vistra, ticker VSD. Vistra is not the same trade as Constellation, but it sits right in the broader power repricing story. If AI keeps pushing load growth higher, and if reliable generation capacity becomes more valuable, large-scale power producers could benefit from that shift. Capacity value, dispatchable generation, and overall electricity scarcity become more important in that world. This is where the story gets more interesting, because the market does not always price power names for structural demand acceleration until the evidence becomes impossible to ignore. Vistra is not the clean nuclear contract story. It is the broader power generation angle if the AI build-out drives a sustained repricing of electricity and capacity. The risk is that not every power demand headline translates neatly into near-term earnings. Utility and generation economics are complicated, regulation matters, and power stocks can move hard before the numbers fully show up. Now let's talk about BWX Technologies, ticker BWXT. BWXT is one of the higher quality names in this whole setup, because it gives you nuclear infrastructure credibility without needing pure speculation to make the case. This is not the retail favorite headline chaser. This is the industrial quality angle. BWXT is tied to reactor technology, nuclear components, and high-value engineering capabilities. That gives it a different profile than the more speculative advanced nuclear names. If the market starts to treat nuclear as a serious part of long-term AI power infrastructure, companies with real industrial credibility could draw more attention. What may be underpriced here is quality. A lot of investors rush to the loudest nuclear ticker, but when institutions step into a theme for real, they often prefer proven industrial exposure over pure concept stocks. The biggest risk is that BWXT is still less direct than Constellation when it comes to the current big tech demand floor signal. It fits the infrastructure logic, but it is not the clearest direct contract beneficiary. Next is GE Vernova, ticker GV. GEV is one of the most important second-order names in this entire conversation. Why? Because if AI becomes a power and grid story, then the winners are not just generators. They are also the companies tied to electrification, grid equipment, utility upgrades, and transmission enablement. That is exactly where GEV can matter. The market may still be focused on the excitement of generation, but generation alone is not enough. You need transmission. You need utility infrastructure. You need electrical equipment. You need the broader stack that actually moves power where it needs to go. That makes GEV a serious infrastructure angle behind the headline. The biggest risk is that this is a broader electrification story, not a pure nuclear trade. That can be a strength, but it also means the stock may move on many factors beyond the specific thesis. Then we have Quanta Services, ticker PWR. PWR may be the purest picks and shovels infrastructure builder on the list. If the AI build-out drives more grid expansion, more transmission work, more utility capex, and more power infrastructure spending, Quanta sits in a very interesting spot. This is the company type that could benefit from the physical work required to support the demand. That is what a lot of investors miss. Retail often chases the sexy part of the story, but the real money sometimes sits with the builders, the contractors, the engineering-heavy names that actually turn demand into projects. The market may be underpricing how large the build-out could become if hyperscaler demand keeps pushing utilities and infrastructure planners to move faster. The main risk is timing. Infrastructure spending can be lumpy, project cycles can stretch, and even a strong long-term thesis does not guarantee a straight-line move in the stock. Now we get to the higher beta names. OKLO, ticker OKLO, is not the same kind of signal as Constellation, Vistra, BWXT, GV, or Quanta. Let's be very clear about that. OKLO is an advanced nuclear narrative beneficiary. It is a watchlist name for sentiment, optionality, and future repricing if the market starts assigning bigger value to next-generation nuclear solutions in the AI era. That does not mean it has the same demand floor evidence as the companies closer to current power or infrastructure visibility. This is not a direct Microsoft, Amazon, or Google power contract story. This is a higher beta sympathy trade if investors decide that advanced nuclear could become more relevant as hyperscalers search for long-term firm power. The upside is obvious. If the narrative expands, high beta names can move fast. The risk is also obvious. This is a longer duration story with more speculation, more execution risk, and less current visibility than the infrastructure names. NuScale Power, ticker SMR, fits a similar category. It is another advanced nuclear watchlist name that could gain attention if the market starts repricing the role of nuclear in powering AI growth. But again, this is not the same thing as being a direct beneficiary of a signed hyperscaler demand floor agreement. Some are infrastructure, some are narrative. SMR is closer to narrative optionality. That does not make it irrelevant. It just makes it riskier, more sentiment-driven, and more dependent on future execution regulation, and market appetite. So here is the clean way to frame the baskets. Basket 1 is the real demand floor and infrastructure group. That is CG, VST, BWXT, GEV, and PWR. One basket is closer to real power demand visibility. Basket 2 is the speculative advanced nuclear sentiment group. That is OKLO and SMR. The other basket is closer to long-duration narrative optionality. And before we rank them, we need to talk risk. Big tech demand does not automatically translate into near-term earnings for every stock in this theme. Existing nuclear assets, utilities, and infrastructure names may benefit first. Advanced nuclear names may remain highly speculative for a long time. Regulatory delays matter. Project delays matter. Capital intensity matters. Market enthusiasm can get ahead of real-world timelines very quickly. Not every power stock is a buy after a strong move. A watch list is not the same thing as a buy signal. And nothing in this video is financial advice. I'm not your financial advisor. This is market commentary and research for education. Now let's rank the stocks from number 7 to number 1. Number 7 is SMR. The narrative is strong, but it is still very speculative and much less directly connected to signed big tech power demand. Number 6 is OKLO. Very interesting advanced nuclear optionality, but still a long-duration narrative trade rather than a clear demand floor beneficiary. Number 5 is PWR. Real infrastructure relevance, real picks and shovels logic, but less direct exposure to the nuclear side of the repricing than some of the names above it. Number 4 is GEV. Strong electrification and grid upgrade relevance tied to the broader AI power stack, and one of the more compelling second-order infrastructure angles in this theme. Number 3 is BWXT. Credible nuclear infrastructure, stronger industrial quality, and a more serious long-term positioning profile than the speculative names. Number 2 is VST. A meaningful power generation angle if electricity scarcity and capacity value continue getting repriced in the AI era. And number 1 is CEG. This is the clearest demand floor beneficiary in the group because the Microsoft agreement gives the market a direct example of big tech locking in nuclear-linked electricity supply. That is the signal. The most important institutional message in the nuclear trade may not be sitting inside a filing. It may be sitting inside these power agreements. The obvious trade is nuclear hype. The deeper trade is the companies that could benefit when the biggest buyers in the world stop talking and start signing. So keep your eye on the difference between story and demand. Keep your eye on the difference between narrative and infrastructure. And keep your eye on the names that may actually benefit if big tech is helping create a durable demand floor for clean, reliable electricity. If you want more second-order market breakdowns like this, subscribe to Stock Breakout, hit the like button, and comment which stock you would rank number 1 in this AI power trade.